The longer term vision is to obviously generate cash flows and using that capital to go explore the rest of the project. So I myself, I'm the third largest shareholder. I've invested about 1.6 million personally. Now what we can actually do to go from 500 to 1,000 tons per day is upgrade the plant, and we think we can do that internally just out of cash flows. But the former head grade at El Rincon was 6.5 grams gold and 850 grams silver. So extraordinarily high grade. And that's the prize. So,
all right. Today we're having a discussion with Alexander Langer, the CEO of Sierra Madre Gold and Silver. You guessed it, a gold and silver mining company with operations in Mexico. Two projects actually, one of which is currently being commissioned into full commercial production. Alex, it's great to have you on the show. Thank you for your time. Perhaps we can start off with a short and sweet 30,000 feet overview of your business.
Absolutely. Thank you guys so much for having me. Pleasure to be here. Sure, Sierra Madre Gold and Silver. We are, as you just mentioned, one of the newest producers on the market. We actually started small scale production on June 25th and we've been in continuous operation ever since. We started mining from the fully permitted past producing La Guitarra silver and gold mine, which is located about 2.5 hours outside of Mexico City. We are currently ramping up towards commercial production, which is 500 tons per day. So we started at 270 tons per day. We've pushed to 300, now 350 tons per day. And our next milestone is 400 tons per day before full commercial production of 500 tons per day. So in essence, that's a business. We're starting with production, generating cash flows, and we'll be moving towards expanding those cash flows and also the exploration upside that we do have at La Guitarra.
It sounds great. And maybe we can go in a bit deeper about the La Guitarra project. Perhaps you could explain us what facilities are there, what is for example, the plant capacity, and how will you run up to its nameplate?
Absolutely. So the mine itself, it's been in production quite a long time. Greg Liller, my chief operating officer and executive chairman, actually modernized the facility in the mid-2000s. It used to be about an 80 ton per day facility. Now the full facility is about 500 tons per day. The whole project wide, it's about 30,000 hectares. It's one of the largest exploration packages in all of Mexico. So beyond the quick to production scenario, what we do really like about the project is the exploration potential. So again, commercial production is 500 tons per day. So we have a mill, we have underground workings. There's been over 236,000 meters of drilling. So currently there's a 47 million ounce silver resource that's in all categories, and that's an equivalent resource. While the mine was in production at 500 tons per day, it was producing about 2.5 million ounces of silver equivalent ounces per year, which isn't huge. Obviously, when we bought the mine for First Majestic for 35 million US, it was on care and maintenance. Having said that, they did have a full team there. They did an excellent job on care and maintenance. 1 million ounces a year for a company like First Majestic really doesn't move the needle. So that's why they had it on care and maintenance. And for a company like us, it is quite significant. So we were fortunate enough to purchase the mine, and now we're pushing it forward. The mill is in great shape. We will look to eventually double capacity to 1,000 tons per day and maybe even more over the next number of years. But for 2025, we will be running at 500 tons per day, and then we'll incrementally move that up out of cash flows. So we'd go to 650, 750, then up to 1,000 tons per day. I think eventually the full size at this mine and operation would be about 12 to 1,500 tons per day, just because of the footprint, just because of the access and things like that, and the amount of, possible material that is there. We think 12 to 1,500 tons per day is probably the perfect size eventually. But again, give us a bit of time to get there. We want to walk before we run, so that's why we're incrementally growing. If you ever start production and you go too fast and you miss on your development, and you have to announce that you've dropped production, the market absolutely hates that and kills you. So we just want to be pragmatic. We have 6 open phases right now. That's areas that you can be working in, and we do want to get up to 20 before we would even look to increase throughput. So we're increasing development underground. There's about 50 kilometers of tunnels, but we do want more. So we are pushing forward. The mill and everything is in great shape. Lots of little things to fix and replace. Obviously, it was on care and maintenance for a few years, but it's gone really, really well. We've been ahead of schedule pretty much every step of the way. When we finally acquired the mine in May of 2023, we announced kind of 2 years towards production, and we were able to start within 13 months, which was pretty impressive. So we've kind of overachieved on every little thing that we've done so far.
Yeah, that sounds great, especially that free cash flow funding option you discussed, and obviously the length you can build up the mine and current processing plant. Perhaps you already hinted at it earlier, but perhaps you could dive into that test mining project you're currently running and feeding the mill with?
Yeah, so we actually started underground mining, like traditional mining, shrinkage, and stope mining beginning of June. So we have about 15 days of materialized material that we've brought up to surface. That's currently in bins, so we started to process that. Beyond just the new mining that we're doing, the fresh material that we've been blasting, we're actually quite fortunate. There's 2 years of material called retaques. Now retaques are former waste rock that the mine had blasted and didn't quite process, but put back into the underground as backfill. Now, when the mine was in production, as I mentioned, in the 1990s and early 2000s, the cutoff grade was actually 8 to 10 grams gold head grade, so really, really high grade. So in essence, what they would do is they would blast a vein, they would visually pick out the pieces of the vein with their hands, process that material. Now, the rest of that material was actually just left there. So what we done is we sampled about half this material. It's about 40,000 tons, which at 500 tons per day is, kind of 2 full years of production, and it averages grade of about 350 grams silver equivalent. So some of the highest grade material we do have. So what we've been doing is we've been blending that retake material with the underground fresh rock that we are blasting to get a consistent feed for the mill and the operation. So we are quite lucky. If we stopped underground mining completely, we'd have almost 2 years of this backfill material that's already pre-blasted that we can start to process in the mill.
That's a tremendous asset, and perhaps this is a great point to start talking about how your resource currently looks like. Perhaps we can outline what kind of tonnage you have, what kind of grades, and please also tell us how that converts into life of mine.
Sure. So we do have to be a little bit careful. So we went forward without a PA or feasibility study or bankable feasibility study or definitive bankable feasibility study. It can be quite expensive to do that, but also take you a very, very long time. So again, this mine was in operation in 2018. So we know our costs inside and out. We know our labor costs, we know our energy costs, we're hooked up to the grid, there's water, ample road infrastructure. There's actually a town of about 20,000 people that lives within 6 kilometers of the project. So we know all our ancillary costs. So rather than doing the traditional route of feasibility and whatever that entails, we jumped into test mining right away to generate cash flows. Now, having said that, what gives us a level of confidence is the 236,000 meters of drilling that's been done on the project. Today's value is probably close to $40 to $50 million. Not to mention the mill to replicate that would be exponentially way more than that. So traditionally, again, you would start with your feasibility and try to get a better understanding of your costs. But since we know all that, we're quite comfortable. The first thing we did when we acquired the project was update that resource. So historically, there was 17 million ounces of silver equivalent in all categories. We tripled that, actually without a drill hole. There was quite a bit of historic information that hadn't been updated. So what we had to do is audit the underground, and that was a pretty big task. It cost about $1 million US. And in essence, we did a LiDAR survey underground, and we track mounted it on the back of trucks, drove through the underground, and scanned the areas that would be mined, what hadn't, overlaid that with the drilled hole databases, and came out with that resource. So in total, it's 47 million ounces of silver equivalent. It's about 20 and 27 in inferred and indicated. And for us, that's enough confidence to start test mining. Again, because we have all that other information. We feel that's just a start in terms of the resource size. If you wanted to work backwards in terms of the mine life, historically the mine was producing 1 million, maybe 1.5 million ounces silver equivalent per year. So if you're at 47, we're all fairly young, but that's a very, very long time. So that's one of the reasons why we will be looking at doubling throughput in the next couple of years.
Excellent, thank you for that overview, and that math is relatively simple. It gets you to a couple of decades for the viewers at home. Of course, let's quickly talk about how you actually got this mine in the first place. You already hinted at it, you purchased it from First Majestic through equity, which means they're now a large equity holder of your corporation. You also did a loan construction with them, and you started hinting at that roughly 1,200 to 1,500 tons per day production would be the perfect size, perfect output for your mine. Perhaps we can outline how the funding currently looks at for your corporation. First, what would be required in that growth plan to get there?
Absolutely. So again, yeah, we acquired the mine. Took a good year to do due diligence, and actually the exchange. We had issued more shares than we had currently within Treasury, so we had to, in essence, do a whole IPO again. So that took a very long time. So again, my technical team had a rich history with the mine. Greg Liller, Luis Saenz, Alejandro, they all had worked and ran and operated La Guitarra previously. So I think it was one of the reasons that First Majestic had quite a bit of technical confidence in my team in selling us the mine. We paid 35 million US dollars. That was all in shares. They didn't want cash at all. They really liked the mine. They liked the exploration potential. And because of that, they are now by far our largest shareholder. So they currently own close to 45% of all the issued and outstanding shares of Sierra Madre, gold and silver, and they've been amazing partners. They've helped us out, even with equipment, and we have our own assay lab, but we needed a couple assay machines, and sure enough, a week later, the assay machines showed up. They've helped us so much that we had a little bit of a budget shortfall. When I acquired the mine, I raised $10 million at 65 cents on the back of that, and that was actually going to be used for exploration purposes. However, the quick to production scenario kind of showed itself, the shape of the mine, also the price of silver and gold really started to appreciate. So it made a lot of sense to see if we can get into test mining and hopefully eventual commercial production. So we focused our capital on that instead. Now we did have a bit of a budget shortfall. It was $3.5 to $4 million US dollars, and that was for some mining equipment, a little bit more of underground development. The mill needed a little bit of work, not much. So I had gone out to the market to look at the best way of raising that capital, whether it was equity or debt or royalty or offtake. So I did actually have a number of offers, and I was getting ready to sign a deal on the debt side, but it did have some warrant coverage, which I wasn't the biggest fan of, and just happened to be chatting with First Majestic, and we went through the plan, the mine plan, what the next steps were, and they were gracious enough to provide us with a $5 million US dollar loan, just a 2-year term, interest only after 6 months, and we can pay that back anytime with the lump sum due in 2 years. So really friendly for us. The terms were excellent, and it was good for them. So it really gave us a vote of confidence, that we were able to raise that capital. Now moving forward, we should be doing all right cash-wise. We do have a little bit of money left over from there, and obviously from the sales that we're making now, we're generating, on average, we're moving forward a couple trucks a week, which brings in, a number of $100,000, which is great. And that'll be growing obviously towards the end of the year. Now what we can actually do to go from 500 to 1,000 tons per day is upgrade the plant. And we think we can do that internally, just out of cash flows. The flotation cells and the filter presses, that's kind of the last stage of mineralization when you remove the silver and gold, and then you press it to bring out the concentrate. It's actually rated much higher. It's already rated for 1,200 tons per day. The crushing circuit is actually rated for 650 tons per day, and the ball mills, which is the grinding circuit, is about 520 tons per day. So that's the biggest bottleneck. Now we could actually add a 4th ball mill for about $1 million US dollars for a 500 ton per day ball mill. So really not a huge amount of money. Now the crushing circuit, if we wanted to double capacity there, we'd have to build a brand new side-by-side facility. There's space for it, there's power for it, and a rough estimate on that would be, kind of $3 million US dollars. So again, not a huge amount of capital outlay for anywhere from 4 to 5 million US, let's call it, because the cost will go up. We feel we can double the throughput capacity from about 500 to close to 1,000 tons per day, and that would be over a number of years. So again, not something that has to be done right now, but we're pretty confident we'll be able to do that out of cash flow, so no real need for extra capital.
Excellent. Of course, doubling your production profile for a couple $1 million, let's call it, with inflation. That's definitely a very interesting value proposition there. Perhaps we can talk about First Majestic. They are now almost a 45% owner in Sierra Madre. Perhaps we can talk about those incentives. You already talked about them being lenient enough to give you this debt, but why did they sell the project in the first place to you guys, and why are they so willing to keep an equity stake in you?
Yeah, so they put it on care and maintenance in 2018. Now the mine was actually making money, but it was really marginal, maybe making $1, maybe $2 per all-ounce silver ounce for them. And right around the same time, they had acquired a mine called San Dimas. Now, San Dimas is incredible. Now, this mine produces monthly what La Guitarra was doing on a good year. So they refocused their production capital, things like that, over to San Dimas, which makes a lot of sense. Again, 1 million ounces a year really wasn't moving the needle for First Majestic, at that point, they were well over 20 million ounces of silver a year. So they had on care and maintenance. Now they really liked the mine. They were eventually planning to put it back into production. And yeah, I think it was just the rich history that my technical team had with the mine. And we put together the mine plan and what we thought would be a good plan for the project moving forward, and they were gracious enough to sell it to us. Again, they wouldn't take cash. They really believe in the mine and the project, so that's why they took it all in shares.
Sounds great, and happy that they're still active in the story. Now, if I look at the share structure, besides First Majestic, the insiders and managers are 25% shareholders. Could you maybe elaborate on that, and then also highlight the team you've gathered around yourself?
Absolutely. So I think share structures are extraordinarily important. So issued and outstanding, we have about 153 million shares. 69 million of that is First Majestic. And you're right, management and founders, we still own just under 25%, so 24.8% of the issued and outstanding shares, which is a really big number, especially for a company at this stage. So I myself, I'm the third largest shareholder. I've invested about 1.6 million personally. Greg Liller, he's well about 1.2 million. So you can see we actually have quite a bit of skin in the game. I truly believe that, to push these projects forward, you really want management teams to really have big ownership stake, as things progress. And we've been fortunate enough, we have that. We don't have any warrants out with the company, which is also, kind of one of the things I do. I think if you want to own the stock, you can't just write a warrant, you have to own it, which is important. We do have some employee options out there as well, which is quite neat. So every single employee at the mine, there's about 80 of them, plus we have another 100 union workers, all have options in the company at 50 cents, which is pretty cool. So when they go to work, they do have a small ownership, even if it's the IT guy all the way through the kitchen staff. It's pretty neat. So it could be a small amount, but it gives everyone a little bit of ownership, which is pretty special. And sorry, what was the second part of that question, Lars?
It was about the incentives and the management, which you've already answered both.
So I'll get into management a little bit. So I myself, I'm not technical by any means. I just come from a capital markets background, but I've been fortunate enough to be part of some good management teams that have done quite well. I was vice president of capital markets at Millennial Lithium. We sold that for $470 million about 3 years ago. I was part of Prime Mining, same with Greg Liller, our chief operating officer, and Luis Sainz and Alejandro Carvalho. So a really strong technical team that have a lot of rich history with the mine. Greg is amazing. Greg is an exploration geologist, but he's ran and operated numerous mines. He's actually now at 8 projects become mines, which is spectacular. You do it once or twice, you could be lucky, but to do it 8 times, it's pretty neat. And 2 of those 8 just happen to be Guitarra, which is quite neat. So he's had some pretty big M&A himself. He had sold a company called Gammon Gold. They sold that for $750 million US. He retired, I think, for the 2nd or 3rd time, and didn't need to work, but he was offered a trip down to take a look at Guitarra, so he did. And he said within an hour he knew that he was going to take the job on. And when he acquired it the first time, he really thought the exploration potential was much bigger than El Cubo, which produced well over 8 million ounces of gold now. So that's the prize that we do want to get into over the next while, is use some of these cash flows, if all goes well, to go explore the rest of the project.
All right, excellent. And that's a great backstory. We would love to talk about exploration in just a bit. But before that, perhaps we can talk about those cash flows. I know you haven't done a PEA, but perhaps you can outline what kind of cash flow should investors expect from this mine heading into the future?
Yeah, I do have to be careful, as you mentioned, but we can talk about historic numbers for sure. So historically, the mine had an all-in sustaining cost of around $13 US an ounce. Obviously, we'll be higher than that, especially with test mining, and things have gone higher. Cost of reagents, the chemicals you're using, and energy and manpower. Things are higher, but they're not extraordinarily higher. So the analysts, we do have some analysts covering us, and they have a target between 16 to 17 US all-in sustaining costs. So that kind of gives you an idea of where the market thinks will get to, and we hope to beat that. It won't happen right away, but if all goes well and we push forward, I think there's a good chance we'll be able to beat that number moving into 2025. I hope that gives people a rough estimate.
That does give a rough estimate, and of course, if you use that ton per day figure, roughly 500 tons per day in 2025, with the grams a ton you have and that cost profile, you hope to beat $17. People at home can calculate what kind of cash flows we should be thinking about.
Yeah, and we'll be able to share that, relatively soon. So I think Q1 of 2025, that'll be the first time we're able to put in all-in sustaining costs and all of that. So just because we are in test mining and processing, we can't, come out with that. You can look through the financials and try to get an idea, but it won't be until the first quarter of 2025. And what's actually quite nice is after a year of production, so in Q3 of next year, we'll start to be able to put out some guidance as well. So we can say this is what our cash flow expectations are and things like that.
All right, it's a very early on story, but that's maybe also where the potential is still there as an investor. And perhaps we can talk about that ore body you actually have. I believe it's epithermal, which means it's probably quite veiny in nature. Perhaps you can talk about what kind of ore body you're looking at and what kind of exploration you're planning to do over the future and what the low-hanging fruit is.
Yeah, no, you're absolutely right. It's a traditional Mexican low sulfidation epithermal type system. So lots of veins. They range anywhere from 1.5 meters up to 8 meters in width. The grades on average are about 220 grams silver equivalent. For an underground mine, that's totally fine, especially with all the development that's been done. It's higher grade than some of the other mines. It could be higher as well, but that's excellent in terms of today's prices as well. We are quite fortunate that with today's silver and gold prices, we can make a number of mistakes and won't have any issues just because of the price, but obviously we'll try to minimize that. So the exploration potential is really why I acquired the mine. We currently have 3 field geologists, exploration geologists out there every day. We take about 700 geological samples. As I mentioned, we have our own lab, so turnaround times and costs are very, very low. We've now identified 60 kilometers of vein material at surface, whether that's stockwork, whether that's breccia, whether that's veins. So what we're doing is we're mapping. These guys are amazing, and we're building up drill targets fast and furious as quickly as we can. We're going to start trenching these areas probably in the new year, January or so, really give us another data point, and then we want to go drill, if all goes well, kind of this time next year. So the rainy season where we're located starts in June. We won't be ready to drill for quite a while. We really want to build up drill targets. It's really important, especially the first pass, that you have a pretty good understanding of where you're going to be drilling and what the potential is. Now the project itself, La Guitarra, the whole complex, has actually been in production from the 16, 17, 18, 1900s. So really, really rich history. It used to be one of the largest, highest grade producers of silver gold in Mexico. It was known as the jewel of the Spanish crown in New Spain for a number of years. There's 2 former mines on the site as well that are really interesting to us. One is El Rincon, the other one is Mina de Agua. Mina de Agua shut down in about 1910, so just about 115 years ago. They got a little bit too deep and it flooded. And back then there was no technology to dewater the mine as there is today, and nothing's happened since. Also another mine that was there called El Rincon, same thing. That one shut down in 1930. They got a little bit too deep, it flooded, and nothing's happened since. But the former head grade at El Rincon was 6.5 grams gold and 850 grams silver. So extraordinarily high grade, and that's the prize. So the longer term vision is to obviously generate cash flows if all goes well with the test mining moving towards production and using that capital to go explore the rest of the project. We truly feel it is, if not one of the largest undeveloped silver districts in all of Mexico.
Yeah, that definitely sounds great, especially that 60 kilometers of map mineralization. That's impressive. Then again, moving over to the second project you have is also located in Mexico, and that is the Tepic project. Could you maybe explain a bit? I understand it's mostly focused on early exploration. Are you planning to do anything with that in this year or next year, or is that really a long-term play for the company?
Good question. So Tepic we really like, but it is small in scale compared to La Guitarra. So the area there is about 2,600 hectares. There's been a good amount of drilling. We've done about 47 drill holes ourselves, but La Guitarra is, 15 times larger just in terms of the size and exploration potential. So to be honest, 98% of our focus will be on La Guitarra. We would like to come out with a resource report to Tepic. We think we have enough information now. We've just been so focused on La Guitarra and ramping up test mining that we haven't been able to get to it. But if all goes well, we will come out with a resource report at Tepic sometime next year. I think it's important if we're able to get a number that we feel comfortable, something around 20 million ounces of silver. Then we would look to put some economics around that project, if not do a bit more drilling. But again, the potential and the grade potential and the size potential of La Guitarra, kind of puts Tepic on the back burner. Having said that, we like the project. The area is really good. There's other mines close by that I think we could, maybe eventually have another mining hub within Nayarit, where the Tepic project is located. But for the time being, honestly, the majority of the focus is on La Guitarra.
Alright, makes complete sense, focus on La Guitarra. Now regarding Tepic, real quick, last question on this one is it actually far away from La Guitarra? Is there potential to ship the ore from there to La Guitarra, or is it really a longer term bet? And would you be open to potentially selling this project in the future?
Good question. Yeah, so unfortunately it is a little bit too far. Yeah, you'd be looking at kind of an 8 or 9 hour drive between the two projects, so it really doesn't make sense. Having said that, there's about 5 or 6 milling operations close by to Tepic, so it would be something that you would want to do it closer by. So you would acquire something else or do a joint venture nearer to Tepic. We've actually had some groups that have been interested in acquire the project or joint venture, maybe, but not right now. I think we do like the project a lot. We want to push it forward eventually. We've had a few offers, but nothing that would get us excited yet. But having said that, with the silver price moving, you never know what happens. But if we were able to hold on to it, I think we would prefer that route. But if somebody comes by with a great offer, we couldn't say no.
Makes complete sense. I love that take. Now, I would love to transition to the financials, to the balance sheet. Of course, a topic that often isn't discussed in these interviews, but it's very important, in my opinion, for making an investment decision. When we look at your liability side, we see that there is actually a debt on there for 5 million. We've already hinted at it. We've spoken about First Majestic quite a bit. Perhaps you can talk about what kind of interest rate you're paying on this debt, and when do you plan to pay it off?
Yeah, so the interest rate is 15%. So pretty straightforward. We'll start making payments on that here November, December, and it's just interest payments at the time. And then we would pay that off after 2 years, so that'd be in May 2026, the full amount. So that'd be the 2 million plus whatever interest is left over, or we could pay it back early at any time. So not too concerned about that. I wouldn't have taken on the debt unless I was very, very confident I'd be able to pay that off. So, and with the price of silver and gold, I think our timing has been really, really good. So that shouldn't be much of a problem. Outside of that, we have a few $1 million, not a whole bunch, but that number should grow as test mining and processing ramps up. And at today's prices, it's been great. We have a offtake agreement with a company called MRI out of Zug. They've been amazing. In essence, what we do is we load concentrate onto the trucks, we ship it down to Manzanillo, which is on the Pacific side, out it goes, and we get paid within 5 days. So they've been excellent. We're getting, generating cash flows on a weekly basis, which is super helpful. And it's gone decently well. We also have a few $1 million in VAT receivables. That's tax that should be coming back from exploration activities that we've done over the last year and a bit. So that would be quite helpful as well. So building up that balance sheet.
Well, thank you for asking most of my questions before I even ask them, Alex. One question I do have is the price you're selling it to with the offtake. Is it at spot price or is it as a discounted rate? What are you getting for your silver?
Yeah, so that's under NDA, but I could talk again in generalities. So in generalities, you take your spot price, which is amazing, and you discount it for your treatment charges, your transportation charges, things like that. So it's usually spot minus whatever percentage that is, you negotiate on that. We had looked at some other offtakes that were tied to debt or equity and things like that. So those terms weren't nearly as good. But what I can say is MRI used to receive this material back when the mine was in production. And so they understand the quality of it. I believe they're able to blend it with some other mines and get better recoveries. So they've been amazing. We're really happy with our payables and things like that. So, silver silver price goes up, we definitely benefit on that, which is great.
Excellent. Being tied to spot to a certain extent with a small discount sounds great. Perhaps we can end off this interview with your revenue expectation for 2024. I would love to do a free cash flow one, but I understand that's a bit hard for you to do in your situation.
Yeah. So revenues, they're there for sure. I think, again, we started at a small scale, so we'll have 6 months of kind of test mining. We started with 270 tons per day for end of June. That was through July. Went to 300, 350. So the goal is to be at 500 tons per day by the end of the year. So what I can say is we should be shipping about 350 tons by December. So cash flows for 2024 won't be huge, but they will be significant. We should be able to cover our costs and start to save up some money. But it will be 2025 that things get interesting. So again, full-scale production traditionally I was producing 1 million to 1.5 million. Let's call it 1.2 million ounces of silver equivalent per year. And then at today's prices, you can do the math relatively easy on that. Just pick your silver price and times it by, if all goes well, that amount of silver equivalent, and that'll give you kind of the net revenue, and then you obviously just have to take off your costs associated with that, and the analysts have it around 16, 17, and yeah, we hope to beat that.
Alex, thank you so much for taking the time, really appreciate it.
No, thank you guys so much for having me, and again, apologies for not being able to really dive into the numbers just yet, but we'll be able to do that hopefully first quarter next year.
All good. Would love to redo it first quarter next year. Thank you, Alex.
Thanks, guys.